Hi, everyone. Welcome to this weekly update. We are going to update on our instrument and see what is next with our trades. But I believe that the prices had gone the way that I had analyzed last week. On the DXY, we had thought that it's either we are going to do a wave 2 to the upside for more drop, or that it's not the C leg that we are doing, but it's wave 5. So if it had been a C leg to the upside, then we should be dropping. But I said it could be the 5th wave that we are doing. So this is the weekly time frame, and we had seen a bullish recovery when you see this. There's one thing I want us to note about either the weekly price action, the daily price action, and the 4-hourly or the 1-hourly. Anytime you see such an action, what it connotes. So that will guide you. Now, do you see this price action right here? Let me try and zoom in. This first bearish candle, this price action. So anytime you see a price action here where price is forced and closed lower, it could be the other way around. But when you see this, it's just telling you it's marking the bear's presence, the seller's presence. If it's on the other side, it may mark the bull's presence. Now, in this situation, it's marking and it's telling us that the bears, for the first time, they are appearing, they are there. That is what it connotes. But if you think that the price is going to be falling right away, it is wrong. It's just coming for you to be prepared that the bulls, that the bears are in, they are there. They want to do something. But again, it tells you that there are liquidities up there to be grabbed, which means that immediately you see this close, the price will still be going up to probably close. At times, they may even go a bit higher before they come to the downside. So when you see this, that is what it connotes. That is what it connotes. Now, let's come here. Here also, when you see these, after this pressure from the sellers, and this one closed like this, it's also similar, but it's a bullish form. It means that price still most likely is going to be in correction, that the price will not be dropping from here. It means that the price will be in correction to the upside. And that is what it is, either correction to the upside or going up again. It now depends on the format of correction that you're able to see to know if the prices will be going up again to break up. Now, what had we seen during the week? Let's go to the daily. We need to focus more on the DXY to give us a clue. Now, this is what we are taught, that we may be seeing an A, B, and this will run a C leg for us to break to the downside. But it has not turned out to be that the A and the B and the C is turning out to be a 1 and a 2 and a 3 to the upside. So which now means that this price looks set to go up again and break up. The reason is that the extension between here and here had gone beyond 1618, slightly beyond 1618. So we may be seeing a wave 1 of probably the 5th wave to the upside. If we look at the 4-hour time frame, now on the daily time frame, we are seeing this appearing. When this appears, it means that this is almost done, going to the upside to finish this wave, and that the price now wants to move to the downside. Is it immediate or not? That is what we have to find out. Is it immediate or not that the price is coming to the downside to correct this entire run, or that we are still going to see one more push to the upside before we now correct deep? Whatever it is, we are ready to correct this deep. Either we go up one more time to correct, or we are correcting deep almost immediately. So it means that if you have been buying these, it's time for you to think that you want to sell. And when you want to sell because you know what has the exchange here, it's more than 1618. Probably you want to sell and see the way it sells to further go to the upside. So that means we want to probably relinquish a shallow position here to look for a deeper position to go more to the upside. Now, if you look at the 4-hour time frame, and that's where I'll be stopping here on DXY. On the 4-hour time frame, this is what we get, and this is what we thought that what was an A leg. Sorry, this one to the downside is the first move. We thought this was an A leg, a B, and a C, but these had gone to be more than a C. Now, looking into the architecture of this wave itself, it looks more like the first wave. So we are going to look at this as a possible 1, 2, and 3. So a 1, 2, 3 scenario here had shown that the price had broken a 1618. So if I print out the drawing quickly, so it has made this to be like an ABC of a wave 4 that we are going to do the last wave to the upside. That is what it strongly suggests now. That this will be a wave 2 to the upside to 4. That it's an ABC wave looks unlikely with what we are seeing. So again, this price comes to downside. We must not break this now. 105,800 is sacred. Once we break 105,800, that means the price is coming back to the downside. So now, within the ambience of what we know as for an impulse, the first impulse, this is a bit over 1618, which is correct for wave 3. Then we believe that these will come to the downside to finish this as a wave 4. Like I told us, you can see the appearance of this candle again here. This bullish candle. And this also tells you the price still has some liquidity to grab around this area. Price would have liquidity. So the price direction is not up immediately. The price will be coming down, probably to finish this without breaking this or a 50, and price should be going up. But if price should break and violate this to the downside, it suggests then that we are correcting deep and we are advancing towards this area without breaking this point for us to go to the upside. That's what we should expect. Now, with that said, let's go to the euro dollar. Euro dollar. Pay attention to everything that I've said about picking a direction for your trade and how to do it. Now, on the euro dollar, let's quickly go to the weekly time frame. The DXY, it looks more straightforward, but on the euro dollar, it doesn't look much as straightforward as what we saw with DXY. Now, The only thing we can see here is what looks like on the weekly, a wave 1, a wave 2, a wave 3, a wave 4, and we still believe that we are coming to break down to do wave 5. Are we coming straight to breakdown? You know, in planning your entry to break down, this is where it's important to interpret correctly what you are seeing here. You may have seen this as a doji, just like I said. Once you see this and you see this long wick, you still have liquidity to grab to the downside. Now, with this now, price had come down. Is it going to continue to go down, or are we still going to go up? Whatever we do, where we don't want to break now, go to the upside, this is ultimately an area that once you break 1.06300, then we are turning bullish. That's the limit of price to the upside for now. But if you may, if I may really come in, really, I think here we don't want to see price take these 1.05775 or 1.05800 to the upside for us to come to the downside. So the price had closed here, or had opened here on the daily at this point, and it has closed here. But of course, it's in a very corrective mode at the moment. So all that closure and opening, they are not as important as this area here. So we are going to see in the daily what options or what we have. Now, if we go to the daily time frame, a whole lot of consolidation on the weekly time frame. Now, that's the daily time frame here. The daily time frame here, like if you see this week here, it tells us we still have some liquidity to grab here. Is it immediate? Maybe not in the immediate, but we know that at some point the price may still come back down here. There's a gap here, and this shows that we have some liquidity to grab. Now, these we felt has done an A, B, C, and that the wave 4, like I said, around 1.06300 or 320, price should not take this for now. Now, price had gone more like sluggish to the downside, and that is typical of a corrective wave, and also is typical of a wave 1. Yeah. So we still believe that this may be a wave 1, but what are we seeing now with this bullish move here? So it may mean that we are trying to correct this entire run to the upside. So the entire run to the downside to the upside. So now, if you go to the 4-hour time frame, on the 4-hour time frame, this is what we get. Still around this area, we know we have some liquidity to grab, but for now, we are seeing this as an A, B, C, or we wave 4, and this is where we don't want to break for now. Now, in this developing as an A, C, because we are taught it could be an A, B, C for more upside. From the DXY, I wouldn't want to, DXY had thrown things in the more clearer perspective that this is not an A, B, C for more upside, but it looks more like an, if we're going to go down as a C for more upside, this is not clear yet. It's more clear. It's rather too corrective and too choppy for me for us to turn to the upside. But at the same time, we have to follow what the DXY is trying to do. In trying to see to the inside of this may have gone as a 5 waves to the upside here, but this coming to the downside looks incomplete. If we are taught that, okay, this is an A, B, and a C to the downside, we had expected a running flat. These had gone more than a running flat now. It has gone more, it has broken an 100 to the downside. In trying to see the inside of this wave itself as a 1 and a 2, these had marked, this had marked, this had marked a 1 to the downside. 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 This had marked a 1 to the downside beyond 123, but it never got to 1618. Unlike what we saw with a DXY that broke the limit of 1618. This never got to it. If I bring out a drawing, the 1.23 or 123 is around this area. 1.23 is around this area. This is where 1618 is. So it has not marked up properly as a wave 3. So that's like about 16 pips or 17 pips shy of that. So it's more shallow. All we can now expect is that we're going to be having a look at a DXY as we are trying to correct. But what I can see here now from the price action here is that I don't think that this will be come to the downside to break down for now. I don't think so. All we can get, like with the DXY, we thought that probably it was going to probably still go to the downside a bit, finish up with 5 to the upside before it corrects the. We're not getting the same thing here, so we need to be careful in trying to deal with Euro USD. So what we may see here is that we may see price still going down one more time. I think the correction to the downside is not complete. We may see that go to the downside, and the price may shock you to come to this area before it goes on. So that is what I see, but it's more of a more correction without breaking the top for the price to go up. So in that case, we may be seeing that the price already had done a wave 3, and it had broken the limit of what is wave 4, because if we take here from here, it has broken the limit of wave 4. We may be going up to correct a wave 2. What you don't want to break for now is still this point here of the price. We don't want to break 1.06300. So in trying to go up, you don't want to take a 78, and your 78 is around this area. So it still clicks that this area is what price should not take this primary to. If the price should take and break this primary to, then it's the end of it. So we still believe that price should not take 1.05 950, or let's say 1.0600. So price should not take 1.0600 for now if we intend to come to the downside. So if we see any price action on our way to the downside, we can pick another sell where we look at the DXY. But a break out of here means we are bullish. Nzdusd USD is quite tricky, and I would want to recommend anybody to trade Nzdusd USD for now. All you can do is to continue to probably observe and see what happens here. Price went up here, broke down again. We may have finished this as a wave 5 to the downside. This may have been probably a wave 4 A, B, C, or wave 4. This may have gone and finished this as a wave 5 with this price action here. This may have been in the inside of this one at a 1, 2, 3, 4, maybe a 4, a 5. We need price to correct up now. The manner of correction will guide us. We need to take this out first, and when we take this out, we'll see how price will go to the upside. Without breaking this point, we may still see some more move to the downside. But for now, I think we should be going to the upside. If this one closes like this, we should be going to the upside now from here without breaking down. What information can we gather on the weekly time frame here? So on the weekly time frame, yeah, the price is here now. I don't think that this will continue to go down. We need to see how price we probably first take out this area 058 400 is the first area for price to take. If we are going to take it, we'll see. But again, this tells us that we still have some liquidity around this area. What I would expect if we want to go up is that price should not take 0.05880 for now. We may just cross here on the weekly. A break out of here on the weekly means that we are bullish. 0.58900 will be an area not to break if we need to still go down. That's what I can see from there. If we go to the daily time frame, what information can we gather on the daily time frame here? It's the same thing. It is an area. 58900 is an area that the bulls, once you take this area, we are going up again. So we may have seen these for like a 1, a 2, probably we've done a 3, a 4 here, and this is probably the last wave. On the daily time frame, it's pretty much very corrective, burning down. And like I said, on the 4-hour time frame, we need to take this out. So once we take about 58200 or 58160, it means we are correcting deep. Without taking this area, we may go down again. On the 4-hour time frame, let's see how much we are going to go up, taking this area without taking this area for now. Now on USD JPY, that's yen, dollar yen. Let's go to the weekly time frame. On the weekly time frame, what can we see? Now we are seeing these on the weekly time frame. Now, anytime that sees this, so you think, oh, it's an engulfing candle and the price is going to go up and all of that. What happened here? We knew that price had burnt itself out. Now, around this area, when you saw this sign, like I told us, probably it's not a sign. It could be that we have some liquidity to grab here, but why this one is not important in this situation, maybe because look at here, price already had closed and has been falling. So, there's this one is not as important here. But here, when it first occurred here, and closed up here, that tells us the direction of the market will be, if it goes up, it's coming down again. So the price had grabbed the liquidity around this area with this move to the downside, and we can see that the price went up. Now that's on the weekly. Now here, these had closed. We are seeing these again trying to correct to the upside. Are we done? The weekly, if it closes like this, we may be seeing a doji appearing in the coming week. So we need to see a doji appearing in the coming week to signal that we are done going to the upside. But it's very tricky. It's an area between here and here, between here and where we are, we should be seeing the reaction. So we need to see 4-hour price action first before we jump in. On the daily time frame, now the daily time frame also had not shown that we need to come down. So I think when we see a 4-hour price action here, then we are going to follow up also with daily price action to see that we need to come down. Now, what I can see here, it's like an A, B, and a C. A C now had gone just around 161.8. We should be seeing some reactions. Price may actually close around this area in the coming week. So we need 24 hours to tell if we want to come down. We need 24 hours to tell here now. I think for me, this is complete. But we still may see a little drag to the upside, but let's allow it to close proper without anticipating that or being too adventurous now. So we are almost there. We are almost there. We may see a small move to the downside and go up around this area. Let's see what the 4-hour time frame is telling us. On the 4-hour time frame, now we are seeing now that this is the first move, which is a wave A, and this is a wave B, and that this is wave C. If we take these an A, B, and a C, not beyond 161.8, we believe it's almost done. So now, looking into this wave in itself, this wave C in itself, what can we see? Let's look at wave C in itself. This is the first wave here, the second wave, and we believe that let's look at RSI. In RSI is still going up here, so we believe that this might just be a wave 3. We need to see a wave 4 and to see what we are going to get. Now, for now, this limit here may just be where we need to break 152 to 270. 153 270, we need to break that to the downside to confirm that we are coming to the downside. So it's either we wait for a proper price action or price to come here and take this low before we know that, okay, we're going to go in. So let's just be a bit more careful. These may close in 4 hours, but let's see more price action or the way things is going to develop around this area before we plan our entry. So that's what I can say here. Otherwise, price may still climb up to this area. Price may still climb up to this area, but we are almost done around this area. We are almost done around this area. This looks like the third wave, maybe the fourth wave around this area. Probably this is the fifth wave. It may come up to this area. It may close anytime from now. And if it drags up to this area, then we'll take it. But for now, do nothing. Let's just continue to observe how it's playing out. So the last one will be gold. And we're going to see how to proceed with gold. Now, gold on the 4-hour time frame, of course, you'll be confused because you don't know what to do. We may say that, okay, this is an A leg. We may say that this is an ABC. This may actually have completed our move to the downside. And we are taught that this is the first, initially we thought this is a B wave in relation to this one as an ABC of an A B. And we are coming to the downside by seeing this A and a B go up a bit and come down. But now this is what price gave us. And with this, we broke up here. And we are taught that this may be a wave 2 to the downside. If this is a wave 1, this may be a wave 2. But for now, what we can see here, we may now see this as a wave A, B, and a C. That is the way I'm seeing it. But then we need to gain clarity on the higher time frame to know what exactly price wants to do. If you want to engage this, let's go to the weekly time frame. That's the best way to approach this on the weekly time frame. Otherwise, gold will burn your account and waste your money. Now, on the weekly time frame, what are we seeing here? You can see this if the price closed like this week, the direction of movement is up and not down. That is what I can see. The direction of the movement, it will be up and not down. So if the price would close like this, I think the price will close without breaking this bottom here. The bottom here at 26.34, it's sacred for price to break. As a matter of fact, price may not even take this low of 26.43. But for now, between this area and this area, yeah, price will find its support and will begin to go back to the upside. So if I were you, I'll be looking for buys and not a sell. Anybody will have thought that, oh, it's an A, B, and a C. But with the price breaking this top here, I think this is a sell-off now. From this candle, we need to go far back up. Now, on the daily time frame, you can get confused. I just broke it down for you on the weekly. So seeing this move and seeing this move will tell you, oh, you can want to count candles, 1, 2, 3, and 2 candles are already almost eroding this. Yeah, you want to say that, oh, maybe we are going down to do this. I don't think that way. But again, I need to see a proper price action for me to ride up. This may just be a wave 1, a wave 2, and for further upside. I wouldn't want to sell this. I wouldn't want to sell this at this point. I don't think that price is going to be breaking this. As a matter of fact, this is an area that price will not break for now. 26, 24 area, or if we go more here, I don't see price taking 26, 31 or 32. So we are almost at a point that the price is going to go back to the upside. This may be a wave A, B, and a C. That is what I can see for now. In trying to understand that, to take it from the daily, let's see how to do it. Let's see how to do it on the daily. I want to do it more on gold. So we have turned up here. Then let's take all of this out. So this is a limit here. Yeah, that's a limit there. So, and the price reacted around this area. That's a B. So a C from this top to the blue, top plus blue, back to the top plus blue up there. So we want to look for an 100. It cannot be more than 1, 2, 3. This is an 100 here. That's an 100 extension. And this will be a 1, 2, 3. That will be a 1, 2, 3. A 161.8 will break this area. So price will not going to, it's not going to take that. So anything more than 1, 2, 3, then the price is going to push down. So we are almost there. This is an area we should expect reaction. So we expect reaction. If we don't get it at 26.42, we should get it at around 26.30. Those are the areas that we're going to look for price. You think it's quite sharp? On the 4-hour time frame, we are almost there. Like I said, we are almost within this ambience without taking this low. If you're going to look at it, forget that you think it's big. If you look at the retracement, the fib retracement, which one of it is it 100 that would work well or not? Now, I think, yeah, 100 will work well. Probably it will break 100 slightly. It will come here around this area. This may be a desired area here. That may be a desired area. And it may come to 123 because 123 lays exactly at 85.4. So it may just tick here. If it breaks, if it does not reheart at this level, it may come here. And that will be the last place that you can look for your sell and your buy. So if I want to buy here, take a buy here. If it breaks down here, it's coming here, and your stop loss will be around this area. I don't expect price here at all. That will be how many pips if you get it. That's about 50 pips or 60. That's about $6 or $5.9 to risk. So if you get reaction around this area, then again, these are changed. These are changed for me. It is a B, and it's not a 145 again. It's a B. It's an A, B, and a C. So that's what we are getting here. You pay attention to count the internal structure of this wave to see if it's 5 waves already, and that's another thing we can do. But this is an area to look for a push-up on gold. I won't say gold. I don't think this is going to come down to break. A break outside of this area to the downside means we are bearish. But I seem not to get that information on the weekly time frame. And so with that, I've come to the end of today's update. Bye.